Okay, let's just have a look at Bitcoin. Now, I don't have a particular schedule to record this video. I'm not even sure it's going to be a masterpiece because that's not really what I do usually. I just thought it would have been, funny to do that. Didn't have anything better to do this morning, honestly. Now, this is Bitcoin on a weekly time frame, and this is a chart I never really touched in the last month, I could say. Essentially from here, yeah, beginning of January, I think. And mainly because if you look at these two vertical lines I have put here and here, well, essentially Bitcoin didn't go anywhere in the last year. I mean, for the whole 2021, it didn't go anywhere. It just stayed in this range. It just consolidated in this range. So nothing new. Regardless what you were thinking back then, I mean, I know there were some sort of a two camps, right? At least standing to Twitter. Um, and you got your usual moon boys and your usual doom boys, and it's kind of funny to see that when the market is so kind of divided on his opinion on what should happen next, usually nothing happens, right? So we didn't have that return back to 20k, 15k level, and we didn't have that moonshot to 100k. I still remember the styles, 100k before end of the year, yeah, or it was particularly popular. Yeah, this is a bubble. The bubble is going to burst, and we're gonna see it crashing back down in a very dramatic way. Nah, well, at the end of the day, none of that happened. I was still here. Now, I just highlighted a few levels which I think are relevant, and we have seen them playing out over the last year. I do remember in this segment here there was, I think, it was the middle of April 2021, and we had the Coinbase IPO. Pretty interesting. What happened during that time? Oh look, should have moved that, right? Okay. Look what happened. We had this massive raid. The market kind of rallied into the news, and then, well, boom, it was shut down. Uh, that's, if you are familiar with the market, if you have been, especially in these markets, for at least 6 months, you know how news are usually taken. You usually have that, you know, good old fashioned buy the rumors, sell the news, blah blah blah. It's kind of the same thing happening over and over. You got another pretty cool, interesting iterations of it. That was around October, November. What you can see in November, the market is basically is rallying in. What was at the time we had the FOMC meeting where basically they were announcing the intentions to taper the balance sheet of the Fed and rise in interest rates. So I mean, it wasn't such a secret that they would have probably announced something like that. And I think what we had it was just some sort of a manipulation to take advantage of the news, right? So that's where the magic happened, I think. And then we have this massive and violent move to the downside. Now, getting back to a weekly time frame for a minute. Now, what you can see is that basically we have. Let's move on to a little bit more recent times because yeah, we know what happened, right? So it's kind of pointless to discuss it. Essentially, because we cannot do anything about it right now. It's gone. Whether you lost money or you won money, congratulations to you, or well, maybe too bad for you. Doesn't matter, right? Right now, it doesn't matter. Now, it is funny for me because right now I think it's a particular moment in the market, and it's a one of those moments where we could be very near to the inflection point, right? Because we came back uh, down after these, the impulse we had right in here, right? These, if you want to call it an ABC, whatever. We had the impulse up. We basically rated the previous all-time highs in a very dramatic way because we have a double rate basically on news, especially. That was pretty, pretty funny to see. And what what you can see now and what was relevant back then and still relevant for me is that by coming down we kind of broke, yeah, we broke this wing low right here. Now, for me, that's kind of relevant because that was a swing basically which originated this run up. Now, if we come back down and if we manage to close below it, we have what you could define like a shift in the structure, in the current structure of the market. The market structure is shifting, right? It's a similar behavior to what you were seeing right in here, just on a much smaller scale, because we had the same thing. We have the swing low right here, which is responsible for this run up, which is basically the double rate of these highs back in time and these recent highs, and then you have the impulsive move down, which basically breaks market structure in here. Now, on a larger scale, you are having the same stuff happening over and over again. In here, you basically breaks the swing low that was responsible and in charge to be considered in charge for this run up. Okay, so the market is kind of shifted. Um, it's not like a full-on break of structure, because if you zoom out and if you look at the bigger picture, the same logic that we have applied in here and in here can be applied in here. This is a swing which is responsible for this run up, this double push up, and as expected, we found support in this pocket right here. Same as we found support. I don't have the drawing on, but we can put it on. Same as we found support the first time we came back testing this area, right? Naturally, you expect reaction at those levels, because those were, you know, the last areas on the chart where, no matter what you think about this candle, but while price were going down, right? You kind of had these phenomena in which, while price is collapsing, someone is really buying it up. It's really accumulating. I mean, how can you decide, or how can you say it is an accumulation? Well, you don't know. I mean, not in this candle, but you know from what actually transpire on the following ones, right? One, two, three, very thick bodies, very impulsive candles. This is conviction, right? This is the market which is really showing you the willingness to go up. That's the same thing you had right in here. Down close candle, and if you use one candle could be enough, but if you use the following two, it's really clear that if the market reacts like that in these candles, someone was really, really buying it up. Shit ton of bitcoins, right? And naturally, you expect some sort of a response if those levels are reapproached by the market. Now, as I was saying, it's a delicate situation, because on the other hand, you can see that the last swing high, which is this one right in here, which is responsible for the break of this structure, it's kind of like you are making the same reasoning, you are applying the same logic, but just in the opposite way. Okay, like in here you got the swing which was responsible for the break in structure, but that was to the upside. Again, another swing low which is responsible to another break. It's not really in structure, but this is just continuation, right? Same you got here. This is the last swing high, which is responsible for the break of these lows, right? So this swing low is taken, it's closed below, and the structure is shifted. The problem is now you're kind of stuck in between these two areas, right? You bounced up from here, and you're, well, so far at least, because it's February the 13th, so we don't know how it's gonna be, let's say 2 weeks from now. But as of now, you have been rejected. It was kind of fascinating to see, honestly, because I mean, it was so perfect. Everything was respected, and the price action in Bitcoin has been so clean in the last months. You can see that we had the bounce, the run up. We basically filled in, we closed in these inefficiency you had in price, this gap, if you want to call it that, and we basically rejected. We have been rejected from this block over here. By doing so, if you have, the well, if you would just want to throw a fib on it, you can see that considering this swing and this swing, this this leg, we basically have retraced that into, in that infamous pocket at this point, which stays in between, the 618 and 706, the 786 basically, which is a golden spot in the middle. I'm not gonna make references right now because I, well, don't want to really uh, entice any sort of a, you know, name to be put in. I'm sure a lot of you are probably familiar with these concepts, but that's what happened, and that's the price responses we were anticipating from these levels and these levels. Now, the point for me would be what's going to happen from here. And again, it's something you could judge on a lower time frame. Maybe if you zoom in on a daily time frame, you could try to go and see what could happen. The drawings are a little bit different here because I'm trying, to refine what I was looking at on a weekly, and essentially uh, coming up from these lows that you were seeing on the weekly time frame, we created this inefficient move to the upside. This whole down move has been rebalanced now, and we are kind of consolidating. It's still, at least the weekends, so I think there's not much of a volume into the market right now. Probably situation would be much more clearer, um, you know, coming into next week. But you could say, something like if price comes back down, retest this area, and we have a bounce in here, that could be good for a continuation, right? Or you could have price just accumulating here, trying for another push higher, being rejected once again above these highs, the recent highs, and then coming back down in the short term. So it's not about really predicting what's going to happen next. It's just, being clear with yourself, having a plan for every single contingencies you can think of, right? It doesn't mean that just because price doesn't come back in here, you're not able to buy in here. It doesn't mean that you cannot buy it up here after maybe we have, the break of this level. The level is being clean, and then you have a retest from the upside. It doesn't mean that you cannot buy in here. It's just, one thing after the other. If X happens, I'm expecting, let's say Y or Z or whatever you want to expect. But let's be ready. You need to be prepared because there is no such a thing, in the market as luck. And I mean that, like, of course, luck always plays a role, but luck can play a role in the short term, or if your edge is very slim, right? But if you have a defined edge, and if you think that whatever methodology you're using, right, over the long run, you're gonna be ahead of the game. You're gonna be on top of the game. You're gonna make money. You're gonna be profitable, right? Well, at that point, what matters for you is just trying to figure out what kind of movements you should expect from the market, and more importantly, uh, what kind of reaction you want to have based on what you're seeing. You need to be prepared, okay? At the end of the day, the old saying goes, luck, it's just, preparation meeting opportunities, right? So be prepared and try to come up with different game plans if you have, and try to figure out what kind of a scenario you could expect, and you need to decide in advance what your reaction would be, because at that point I think you're gonna avoid what a lot of people get caught in, which is excitement or fear or greed, or whatever emotions you're gonna experience. But essentially in trading, that's what gonna screw you over, right? So just avoid that. Be prepared. Okay. That being said, I think it would be nice coming back. Let's use the infamous LARP line. Okay. It would be good to come back in here, maybe accumulating a bit and then shoot higher again. Or you could see something like, sweeping these highs once again, still in this pool of, supply, and then coming back down from there. And then you can have, a similar reaction right? So it's just a matter of what happened first. For me personally, right now, what I'm looking at is essentially that we don't have something like this. I don't want to see this level right in here. I don't want to see this level cracked, essentially, because what I'm really worried about is the outstanding amount of liquidity below these lows. This pool could be really attractive for price to get back into it and tap into it. So if I see this area here basically being invalidated, at that point, it's, yeah, it might bounce back again in this area like we were looking at it before in the weekly. But for me, the odds will kind of shift towards targeting these lows at that point. And you might wonder, yeah, okay, what happened next? I mean, after we have targeted those lows, what's going to happen? I don't know. Nobody knows. I mean, I think even then, the best case scenario, if you want to be a perma bull, would be, I don't know, a shadow a wick through these lows, and a weekly candle that really trades down into it, but close above, some sort of a weekly swing failure below these lows, and then price shooting higher. That would be, a very nice bullish scenario if you want to have that. The problem I'm seeing right now is that I'm not really sure of anything. It's not like you can ever be sure of anything in the market, but somehow you get those periods where you have a very strong bias on the market, and this is not one of those periods for me. I just think, and I was just thinking that this area was sensitive, and it would have offered a little bit of reaction like we had. And as for the rest, I'm really waiting for new information. I don't have any clear idea right now on price, especially again. I really want to stress that a little bit more because we are going to see what's going to happen coming into next week. Um, it might sound silly, and I don't know if everyone is paying attention to it, but we are living a very particular and precarious situation right now. And it's not only about the market; it's something which involves uh, politic and geopolitic, and especially I'm sure you're aware, but the entire situation in Ukraine, right, with U.S. and Russia and whatnot. And I think it would be kind of to be expected that if things really hit critical levels, that the market are going to respond, and I don't think it's going to be a very positive response, right? So it's worth to keep an eye out for that, right? Now, bringing in a little bit more of a um, inclusive outlook, if you want, and just deviating out from the pure technical analysis for 1 minute, there is a topic of conversation that I was having just yesterday with a bunch of people, and it was pretty interesting. And it was the correlation between the crypto market, especially Bitcoin, compared to traditional markets. And I have this chart right in here, and I was looking at. It's kind of intuitive. It's not like you have to have a master or a degree to see that, but essentially you can see that even with a naked eye, it's pretty obvious that these markets are moving together. Now, I think correlation it's something that a lot of people sometimes are actually taking and reading in the wrong way, because they think that just because two or maybe three or whatever asset classes are very correlated, they are gonna move in tandem at every minute of the day, and it's not like that. I think correlation should be observed on a higher time frame and on a larger scale. But it's just something funny that I've seen happening. And yeah, I think they are very, very correlated. And there was this phenomena we were discussing where essentially Bitcoin usually it is a leader indicator compared to the other markets, And I wanted to expand a little bit on that because I do think, yeah, Bitcoin can be a leading indicator if we look at, downside moves. But I think if we look at upside moves, it's a lagger. And I just wanted to bring on an example. Okay, we don't have a lot of history because this chart of Bitcoin is going back to 2017. So that's basically where it stops. But you can see that essentially when we had the blow off top in 2017 and the beginning of 2018, the Bitcoin market put in a top, but the other two they kind of went they went along a little bit more. They went ahead a little bit more before actually putting in the top, right? So Bitcoin put the top first, and it anticipated the down move compared to the S&P, which is in red, and the Nasdaq, which is in green. Okay, and even the capitulation move, Bitcoin started in here. So a few weeks before you really saw an acceleration to the downside on the other indices, right? As for the bottom, they were bottoming out essentially at the same time, maybe Bitcoin a little bit earlier. And what's interesting to see, and that's where I'm kind of adding something to it, is that if you look at it, right, um, essentially both Nasdaq and SPY, they made new all-time highs before Bitcoin even kind of got back to, let's call it, acceptable levels. It's pretty obvious, right? Let's do it this way. Oh, right, got a lot of drawing tools in here. It's gonna be a mess. But all right, okay. Let's just say for the sake of clarity, we are gonna get rid of all of this. But again, if you try to imagine a line in here, right, you can see that basically, let's say the Nasdaq made new all-time highs while Bitcoin was still in here, basically at the levels it was before the dump, right? And even the S&P, it made new all-time highs in here, and again, Bitcoin, it didn't even recover the levels before the capitulation move. So there are examples like that. Even here, in here, you see the same stuff. Bitcoin starts to accelerate to the downside really in advance compared to the other indices. Bitcoin bottom out earlier, but again, if you look at which asset class is making new all-time highs before, you can see the Nasdaq basically it's doing it in here, and it was May 2020. The S&P was a little bit of a lagger, but it's still it was August 2020. It took Bitcoin up until December 2020 to make new all-time highs. Now, okay, the argument would be, yeah, but essentially we regain the pre 2020 dump levels in here essentially. Yeah, okay, we that is a fair argument, I think, and it is true, right? So there's no point in denying that. But even in here, you can see that essentially the Nasdaq was well above the previous all-time high, and the S&P in these instances right here, it was right on the way to do that. To do that. Now, let's take a look at the recent weakness we have seen in the markets. Basically, I was, getting back to that conversation. The observation that was made is that essentially Bitcoin started to really show, signs of weakness uh, around that was April 2021. But in the same period, the indices were still climbing up, grinding up, and it's only a few months later in December where even both of them, the two indices, start to show a little bit of a weakness. Now we don't know if this weakness is going to be confirmed, if we are going to have a further downside move, downside grinding, or if we are going to have even a sudden crash both in indices and Bitcoin. We don't know yet, but it's just funny to see that the correlation is there. But what I wanted to add is Bitcoin can be a leading indicator, but to the downside. While to the upside, I do think that the indices are kind of still leading. And it's not just the graphical representation, but it's some sort of a logic that you could apply to it. Both, these three asset classes, right? These are considered, risk-on assets. So it is natural that if you're playing a risk-on environment and all of a sudden you're basically shifting your view and your actions to a risk-off scenario, and you have, let's say, your portfolio, you have exposure in all three of them, okay? Let's say you got a percentage of your portfolio which is exposed in Bitcoin, a percentage in the Nasdaq, and a percentage in the S&P. Now, if you start to see that the global landscape, the financial landscape, the economical landscape are kind of shifting, things are not that good, and then you have the Fed coming out and saying, we're going to taper, you're going to raise interests, right? If you have this feeling, if you have fear of a down move in the broad market, right? Which one among these three would be the asset that you would like to get rid of first? Because for me, it would be the one which is less liquid, therefore much more volatile, and essentially the asset which could really hit in a negative way my portfolio, not only for the percentage move, but even the velocity at which that move can be performed. So I think that's why Bitcoin leads to the downside. And if you take the same logic, the same argument on the opposite reason, on the opposite way, right? I think that's the reason why the other two, the indices, they are leading to the upside. Because if you want to put on risk, okay, would you put money in having to pick one of the three? If you have fresh capital to deploy, where would you put it? And I know if you are a crypto advocate, you wouldn't have a doubt, right? You would say, yeah, 100% Bitcoin, yes, but people have been calling for institutional to get in and to start to play the game in crypto land. Guess what? They are in, but they are playing the game, the way they want. And if you put yourself in the shoes of, let's say, an hedge fund or whatever, one of the first rules you have is that you don't want to lose money. It's not like the retail investor that put money into Bitcoin and is well willing to be underwater for 1 year, 2 years because it's looking at the long term. But if you are an hedge fund, let's say every 3 months you have to come up with reports. You have clients that are gonna calling you, how are we doing? How my portfolio is doing? You know what, sir, you are down, let's say 20% because we decided to expose you into Bitcoin, and all of a sudden Bitcoin dropped like 40%. Well, I guess an hedge fund that applies the same logic as a retail investor, it wouldn't have a lot of clients in some times, right? So yeah, I just wanted to expand a little bit on that. There would be a lot of stuff to discuss, I think, but I don't want to turn these in a 1 hour long video, so I think I'm gonna cut it in here. I'm gonna cut it. It was just some sort of an experiment, if you wish. I'm not sure if you want to use it or if it's gonna bring any value, but anyway, at least I hope it will be a good entertainment, right? And that being said, let's see what's gonna happen next week with this emergency FOMC meeting. And let's see what's going to happen to Bitcoin in the short term because, yeah, again, I want to reiterate the fact that for the long term, I am a believer in Bitcoin and I think it's going to go up in value. And I mean, simply put, you would be crazy not being exposed into it. Okay. That being said, I'm signing off and I hope this video is going to be interesting. and who knows, maybe we're gonna do a few more in the future. We'll see, right? So peace out.